Good morning and welcome to Stock Market Today and happy Friday, May 10th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Follow along with this show. Daily stock ideas hit your inbox every trading day before the market open. Those are ideas for you to consider. So U.S. equities were lower in Thursday's trading, with the S&P 500 down for the fourth straight day and the sixth day in the past 7. Trade-sensitive materials and technology were the worst performers. REITs and energy were the only sectors to finish higher on the day. Treasuries continue to strengthen. The 3-month, 10-year yield spread inverted for the first time since March. Dollar was weaker on the major crosses. Gold finished up 30 basis points in WTI. Crude settled down about 70 basis points. Your outperformers, REITs, energy, and utilities, materials, tech, and consumer discretionary underperformed on the day. As we get to the desk this morning, S&P futures are down 10 basis points after U.S. equities finished lower, but off their worst levels yesterday. Big rally took the S&P 500 back above support. We'll take a look at that. Asian equities were mixed overnight. Japan lagged. China, though, rallied more than 3%. And European stocks are seeing good gains this morning. Treasuries are a little changed across the curve. Dollar is stronger versus the yen, weaker versus the euro. Gold up 10 basis points. WTI crude adding 60 basis points here today. So let's take a look at the chart here on the S&P 500. Rally reverses early losses to close above support. Now, this chart's a little bit busier than I normally like, but I wanted to really highlight this key support area at 28.50. It's really this opening gap. So call it 28.36 to 28.50. That's the opening gap from April 1st. Resistance 29.40, 29.50. RSI holding above 40 so far. So holding in bullish ranges despite the pullback in the market. At the same time, Chaikin money flow remains bullish. So we can see here the big reversal to close back above the 50-day moving average. That's a red line, and hold above support at that 28.50 level. Below there, 2,800, obviously a key level. And then we have the 27.75 rising 200-day moving average. However, I do think that a break of near-term support would warrant a cautious stance by investors. Think about what that means. Looking at lower beta names, looking at names that tend to do better and outperform when investors are being cautious. Right now, we're holding above support, but we have to think about what happens should that support level break with all the volatility in the market of late. Right now, the line in the sand is pretty clear. We've held above it. Nice reversal yesterday to finish above the 50-day moving average. Your market in a minute. What am I writing about today in my note to Chaikin Analytics clients? Volatility persists as trades talks begin in Washington. S&P 500 reverses early losses to close above the 50-day moving average. We touched on that. Key relationships point to risk aversion in the equity market. It's Friday. I look at a lot of these key themes and relationships that give me an indication of whether investors are, risk-seeking or risk-averse. Signs point to risk aversion, as you would imagine, with the market selling off here. I do see an opportunity in aerospace and defense. Should support continue to hold? And then futures do point to a slightly lower open here today, as I said. Your Chaikin power bars for the major indices. Dow down 47 basis points yesterday. We're even 7 bulls, 7 bears. S&P 500 down 30 bips, 123 bulls, 83 bears. NASDAQ, underperformer on the day, 19 bullish or very bullish stocks, 10 bearish or very bearish stocks. Small caps, relatively an inline performer, 542 bulls, 326 bears. Bonds were the real outperformer yesterday. Bonds uptick, sending yields lower. And according to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Major indexes are mixed. That's this Dow in here at 7-7, not bullish, not bearish, clearly neutral, based on the Chaikin power bars for that index. Stock of the day today, Adtran. Telecom and equipment company closed at 1641, down 61 basis points yesterday. Ticker symbol ADTN. Adtran has a very bullish rating due to very strong price volume activity and attractive financial metrics. But when we take the 20 factors, 5 in each of these categories, we come out with a very bullish rating. So we have a very bullish stock, strong trend, strong industry group. This is the type of name we want to consider owning. You've heard me go through it numerous times. Taking a look at the analysis now, ribbon at the bottom of the screen tells us where the power gauge rating is and has been. It's relatively new. to the bullish or very bullish camp. And at the same time, we're starting to get some outperformance. So market and model are in agreement, dynamic duo in gear for this recent bullish personality change. A lot of that stemming from positive reaction to earnings. But the stock is oversold now in the near term as it has pulled back, but Chaikin money flow remains bullish above a rising long-term trend line and triggered an oversold buy signal today. That's one of our proprietary buy signals within Chaikin Analytics. We can see clear support right here at the $15 level. So to me, as long as the market's holding above key support, this is the type of name you want to consider owning. I think as long as ad trend's above $15, this is a compelling spot to get involved on the long side. Take a look at ticker symbol ADTN as a potential long idea if it fits with your portfolio here today. Very bullish stock, outperforming the market, becomes oversold with bullish money flow and trips a buy signal while above the rising long-term trend line. That is the setup, folks. ADTN on the long side of the portfolio. Sector tracker, movement of the major sectors of the last 5 days. Energy only group higher over the past 5 days as the group kind of rebounds here after becoming oversold on an absolute and relative basis. After that, defensive spiel to the market as staples, healthcare, and REITs have been outperforming of late. Communications, discretionary, and utilities are middle of the road. A little bit surprising to see utilities not doing better with yields coming in and a defensive stance in the marketplace, but we trade the market we have, and utilities are beginning to break below that $57 support level if you're watching the XLU. Bottom of the list, fins, industrials, tech, and materials. Industrials, tech, and materials, obviously the most levered to the trade rhetoric currently gripping the market this week. You've heard us talk about materials. We want to avoid it, but tech, we want to see tech get in gear. Largest sector weighting in the S&P 500. Hard for the S&P to do really well if tech is not in gear. We want to see that trend reverse relatively shortly. Speaking of defensive, Dow Jones REIT Services is our industry in focus today. Over the past 6 months, it's actually been an underperformer, down 1.81%. However, its power bar ratio, which measures future potential, is strong. 24 bullish or very bullish stocks. 14 bearish or very bearish stocks. Now, that gets it a rank of 10 of 21 subsectors that we track. Down 3 slots, middle of the road from an industry ranking perspective. Some of the indicative names there, all with very bullish Chaikin power gauge ratings. Ashford Hospitality, AHT. RLJ Lodging, RLJ. And Ryman Hospitality, RHP. Again, as I said, all bullish power gauge rating. So we'll take a look at AHT here today. Now, a couple caveats. Number one being it's a $5 stock. But of the 3 that were suggested, this one kind of looked the most compelling to me as a potential setup. Just bear in mind, it is a $5.50 stock. So if you don't trade those types of names, it may not be the best to shift gears now given the volatility in the market. But let's run through the process. Very bullish stock, strong trend, strong industry group, type of name we want to consider. Market and model are in agreement here. Been on that bullish rating since late March and now beginning to outperform the market. So here, a bit of a bullish personality change as well. Stock is currently rounding out of an overbought condition. Chaikin money flow bullish. Positive earnings of late, 1, 2, 3. Positive reports of the last 4. Above the trend line, which is beginning to turn higher. And we can see downtrend turns into a base. So for me, I want to see a break through this 575 level to really get excited about the name. I'd prefer it to be oversold before jumping in on the long side, but certainly type of name we want to consider. When the market is lagging, when the market is under pressure, it's the stocks that hold up the best that could be potential leaders when the market turns. So that's why we're highlighting this one today. Relative strength, while the market's been weak, catches my attention here. Again, it is a $5 stock, but you might want to consider it as a small position in the portfolio. Take a look at Ashford Hospitality, AHT. And at the very least, this is a good lesson in building watch lists. Build your watch lists of the names that are holding up the best as the market's weak. Those are your likely leaders coming out if the market does turn. Yesterday's S&P 500 gainers and losers. A lot of this earnings-related. Tapestry up 8.5%. Nectar, NKTR, 7.5%. Perrigo, PRGO, 7% on the day. Mylan, close to 4%. Those are 2 generic drug names, Perrigo and Mylan. So maybe a little bit of a theme developing there, something to explore further. CVX, walking away or, no longer involved in the Anadarko deal. So investors seem to like that, up 3%. Oxy, on the other hand, looks like they're going to be the winner in that deal. Takes the stock down 6.44%. Intel catches a downgrade. Investors not liking what they're seeing there with the margin numbers down 5.3%. CTL, CenturyLink, down 5% following their earnings. MPC's earnings sent the stock lower by 4%. And CNP down nearly 4% following their earnings announcement. Speaking of earnings, let's get an update here. Shineri, LNG beat by 25 cents. It does have a bearish ratings, though. Amarin, AEE beat by 8 cents. Neutral plus stock. Keurig Dr. Pepper beats by 2 cents. Neutral plus stocks. Centerport Energy, CMP, we saw that one down 4% yesterday after they missed by 4 cents. And Duke Energy beat by 3 cents. Earnings coming in at $1.24. A little bit lighter. Calendar starts to lighten up now on earnings. We are through the heavy part of earnings season, but still have some names to look at here. Neutrally rated Marriott and Viacom reporting before the open today, and bearish rated LIN also reporting before the open today. And with it being a Friday, activity after the close, as you would expect, is light. So let's get into it. Key relationships and themes is my note on Fridays, and you know this one well. Semiconductors relative to the S&P 500. Here's the SMH, VanEck Semiconductors ETF relative to the SPY. The key point here is that it is fading from resistance, still above the 200-day moving average, which is rising, but fading from resistance. And I highlighted this box here because, as you'll notice, this ratio tends to peak ahead of the market. Peaked back in November, December 2017, ahead of the market peak in January, and then peaked again in early to mid-18, ahead of the market peak in September and October. Likewise, started to outperform and bottomed before the market bottom, late 18, early 19, and now we're starting to see it roll over again. RSI, still in bullish ranges, but, you know, breaking below. If we wanted to draw a support line here, we probably could. This is concerning to me. I want to see this ratio reverse and move higher with the market holding support. That would give me confidence that the market is going to hold support and likely run back towards and through new highs. This is a key relationship. This is something that I watch closely. I write on it once a week. I watch it every day. It's under pressure. Continued weakness here likely carries bearish implications for the market. Likewise, a stop and reversal move higher would carry bullish implications for the market. Right now, it's erring towards caution. It is a sticking point for me in the marketplace, but we will continue to watch it extremely closely. And you can see here, top and starting to potentially top out for the S&P 500. High beta lagging low volatility is another sign of risk off in the marketplace. In the Invesco S&P 500 high beta ETF relative to the Invesco S&P low volatility ETF in a clear downtrend. And notice how this also topped ahead of the market, topped back in June, bottomed with the market, rallied back to the declining 200-day moving average, and is now moving back through this key level. Overbought, oversold indicator has not been able to become overbought, oversold. So neutral at best. Maybe the best we can hope for here is a stabilization in the ratio. Further weakness again would likely carry bearish implications for the equity market. This is certainly a sign of risk off. When investors are risk seeking, they're willing to own the higher beta names to capture more of the upside. And when investors are risk averse, they'll tend to favor the low volatility names in the hopes of not going down as much as the market. That seems to be the case right now, as this trend is clearly down, fading from the 200-day moving average, which is also heading lower. What I do see, though, is a potential opportunity in the aerospace and defense group. Ticker symbol ITA, the iShares US Aerospace and Defense ETF, has a very bullish Chaikin Power Gauge ETF rating. And look at what we're seeing here. Same analysis, very bullish rating, and just now ever so slightly beginning to outperform the market. But what's really caught my attention is how the intensity of underperformance has been diminishing since April, and now it's holding up pretty well on a relative basis against the market. Again, the process, look for what's outperforming. Fund is oversold with bullish money flow above a rising long-term trend line. Might make sense to look for some names in the aerospace and defense group. My bullish stock of the day today in my note is Northrop Grumman, which also happened to trigger one of our proprietary buy signals. So potential opportunities out there as the market has pulled back. Let's remain nimble out there. That's going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for that email. Follow along with the show. I will see you back here on Monday. I hope that everybody has a great Friday and a great weekend. See you Monday.